going to unpack a really fascinating economic puzzle that's playing out in India right now. This strange relationship between cash and cashless payments. So here's how we're going to break it down. First, we'll look at what we're calling India's payment paradox. Then we'll dig into the data trends to see what the numbers are actually telling us. After that, we'll explore why cash is still king for so many, touch on the policy side of things, and finally wrap it all up with a look at the way forward. All right, let's jump right in. We're starting with this central idea, India's payment paradox. It's a real contradiction that you can see happening right at the heart of the modern Indian economy. I mean, just look at this number. India's digital payment world is absolutely exploding. We're talking about transactions worth a mind-boggling 250 trillion rupees. It really paints a picture of a country that's all in on digital finance, right? Well, here's where it gets interesting. This is the paradox in a nutshell. On one hand, you have the volume of digital payments shooting up by an incredible 35%. But at the exact same time, the volume of actual physical banknotes in circulation also grew by 5.6%. See? Both are going up. That's the puzzle we need to solve. And that leads us to the million-dollar question, or I guess the 250 trillion rupee question. If everyone is paying digitally, why are Indians also holding on to more cash than ever before? Let's see what the data has to say about this. Okay, so in this next part, we're going to become data detectives. We're going to decode the trends and get a real, evidence-based look at what's going on. So a really important metric for economists is the currency to GDP ratio. It's basically a measure of how much physical cash is floating around compared to the total size of the economy. And what's just amazing is how stable this ratio has been. Even after huge shocks like demonetization or the pandemic, it just snaps right back to where it was. It shows just how stubborn the role of cash really is. And this table just nails the point home. Look, on one side, you've got UPI transactions growing exponentially, through the roof. But on the other, cash withdrawals from ATMs and banks, they've stayed steady, totally consistent. And get this, even when interest rates change, it doesn't really make people hold any more or less cash. So when you put all that data together, four things become crystal clear. One, holding cash isn't really about interest rates. Two, all this incredible growth in digital payments hasn't actually replaced cash. Three, when inflation goes up, people actually want to hold more cash. And four, and this one's huge, when things get uncertain, like during COVID-19, people run to the safety of physical currency. It's a security blanket. Okay, so we've seen what's happening. Now for the really big question, why? In this section, let's look at the human behaviors and the structural reasons that explain why cash is still so incredibly popular. First, there's a concept called transactional demand. It's a fancy term for a simple idea. It's the cash people need for everyday stuff. You know, buying vegetables, paying for a cup of tea, hopping on a bus. This has nothing to do with age or education. It's about habit, convenience, and simple trust. And it's basically the fuel for India's massive informal economy. And the second big idea is precautionary demand. Remember how we saw that people grab cash when they're worried? That's exactly what this is. It's the instinct to hold physical money as a safe, reliable asset. During a crisis, whether it's a pandemic or a shaky economy, cash just feels secure. So to quickly recap the main drivers here. Number one, it's just personal choice. People are comfortable with cash. Two, you have the structural reality of the informal economy. Three, a lot of people use physical cash to save and budget. It's tangible, you can see and feel it, which helps control spending. And four, inflation. As prices rise, you need bigger notes to buy the same things, which increases the demand for cash. And this all leads to a really profound point. Physical currency isn't just money. It's what you call a public good. It's something that guarantees everyone can participate in the economy, especially people who might not have a bank account. It's a fundamental tool for an inclusive society. So what does this all mean for government policy? And maybe more importantly for a lot of you watching, how could this topic show up on an exam? Let's shift gears and get into that. Okay, for the prelims exam, you've got to have these facts down cold. First, demonetization happened in 2016. A massive takeaway was that over 99% of those banned notes came right back into the banking system. And also, notice the change in what kind of cash is out there. The 500 rupee note has become completely dominant, making up 86.5% of all currency by March 2024. Now, here's a crucial point for any analysis. The stated goal of demonetization was to go after illegal money by getting rid of high-value notes. But what actually happened, the observed outcome, was that it didn't really change people's fundamental desire to hold cash. And as we saw, almost all of that money just flowed back into the formal system anyway. Now for the mains exam, you need to build a more layered argument. Here are the key points you'd want to make. First, policymakers have to accept that both transactional and precautionary demand for cash are incredibly resilient. Second, trying to force a cashless society can actually backfire, especially for the informal economy. Third, cash is a vital tool for financial inclusion. So what's the best path? It's a balanced approach, one that encourages digital payments but also makes sure cash is always available. All right, let's bring it all home. It's time to synthesize this analysis and think about what the path forward really looks like. And really, this is the main takeaway. The future isn't about choosing between cash or cashless. That's a false choice. The smartest path forward is a policy of coexistence, one that uses the strengths of both systems to build an Indian economy that is both stronger and more inclusive for everyone. So, let's do a quick knowledge check. If you saw a prelims question like this one, asking why cash is still so common despite the UPI boom, well, based on our discussion, you'd know the best answer has to be about that resilient transactional and precautionary demand we talked so much about. And for those of you gearing up for the mains, here's some food for thought. A question like this one, asking you to critically analyze the policy paradox of digital growth and cash demand. This is your chance to weave together everything, the data, the human behavior, and the policy implications, into a powerful, well-structured answer.